Thank you so much, Ricky, for being on the second episode of The Unfiltered Agent. And we're actually here at Home Solution Lenders, which is in Bartow, Florida. Ricky is my guy. So Ricky and I have been working together, I don't know, maybe like 6 or 7 years now on mortgages. And he has saved my ass so many times. I cannot even count it. And if I was going to have anybody on my show to talk about lending, anything mortgage related, this is the guy I would have because he's literally the guy I call. He's the one who does all my loans. So I'm really thankful for his friendship and just being there to save my ass over and over again. He is not only, a really great mortgage guy, but he actually owns this business. He has built this business and he's a pretty incredible entrepreneur in person. So I'm really thankful. Thanks for being on the show today.
You're very, very welcome. Thank you for having me. And like I said, so my name's Ricky Peacock. So we'll say the full name. I am the CEO and president of Home Solution Lenders. I think we've been doing business since about 2016 or 17.
This podcast I created this vision for this show is that I want to show people the difference of how to pick your lender, how to pick your realtor, how to pick a home inspector. And you're not going to, and you may be listening to this podcast and you're not in Lakeland, Florida, where we live. You may be somewhere else in the world where we can't even service you. But what I want you to take from this and from Ricky's story and his passion and what he brings to the table and his work ethic and all the things he incorporates into how he hires, how he trains, how he just manages his business, that he genuinely cares about you. He genuinely cares about his people, his community. And so when you get a loan with someone like a local lender like Ricky, where you have a personal like relationship with that lender, it's not just about the money at the end of the day. Like, yeah, they're not going to be able to write a loan for you if you don't have good credit, if you don't meet the guidelines, but they genuinely care about your experience, right? They want to build a relationship. They want to keep the ball rolling down. They want you to win. Like, I send him so many deals all the time that he can't necessarily write a loan for them, but they never go away feeling hopeless or just not, or they always, like Brian, one of our loan officers I work with, he always helps create a plan. He never just leaves somebody, oh, well, sorry, here's your denial letter. We help people get structured where they want to go. So if you're someone who's new to the home buying conversation, or maybe you've bought and sold a couple houses before, if you want to have a really good experience, you should definitely, and especially with the way interest rates are right now, you're pinching your pennies. Everything counts. Every line item charge on that closing doc, you're probably looking at, or you should be looking at. Make sure you're giving your money. If you're investing in a mortgage lender and like they're investing into you, get one that freaking cares. If you go to one of these big box banks, I cannot guarantee the level of service you're going to get. And that's what I always tell my clients because one of the things I would really wanted to talk to you today is about, from the consumer's perspective, what should people be thinking about when they're choosing a mortgage lender? Like, what is the most important things people should think about, like, in your opinion?
One of the big things that big box banks have always done is rates, right? So everywhere you go, rates, right? That's all everybody sees. I hear it all the time. Hey, what is your rate compared to this rate? And I think one of the biggest things that local lenders don't hide behind, and there's a bunch of them in Polk County. I'm sure there's some in other places of Florida who are just as good, but it seems like Lakeland has a very good amount of local lenders.
Oh yeah, we do. We're very thankful for that.
It's one of those unique things. The big box stores do not have the local knowledge that the local guys do. And it's because they're not in the general area and they push it on rates. So me as a lender, I've never hid behind the small fine print.
Right.
So if you ever try to buy a mortgage, everyone's rates are always lower than mine. I don't know how. But when you start reading the fine print, then people, it's like 9 out of 10 of them don't qualify. And they have to be a mortgage lender to even understand what it says. So when you're looking for a lender, I think the most thing you're trying to do is, one, find out how many loans they actually competitively closed the last month. And I'm talking about loan officers, right? So are you dealing with someone who does 5 to 6 a month? Or are you dealing with someone that does 30 to 40 a month? So it's a matter of finding the level of what you need. And what we do a good job of trying to get our loan officers to explain the full scenario to a borrower. Sometimes it makes them run, sometimes it doesn't, but when you can give them the full scenario, not just here's the rate, your rates today, and then no other knowledge behind that. So what we do is we try to give them the knowledge, like, hey, we can do your loan, right? Here's how we can do your loan better. Maybe you need 1 point on your credit score. Maybe you need 2 points. Maybe if you pay down this, your ratios get that much better and or you put down 1% more. So we do a lot of working behind the scenes, a lot of different credit scenarios. We're experts in AUS as far as getting automated approval. So there's a lot of things we do. One of our advantages versus other companies, we do a lot of new construction.
Yes, you do.
So when you think of 13, 14 years of new construction, I see way more credit reports than most loan officers do. Most loan officers may see, let's say, 250 credit reports in a year. That's 20 applications a month. Our loan officers may see 750, or they may see 1,000, or combined with their partner who's sitting next to them, because we have 5 or 6 back there, they may see 2,000. And that's a lot. So when you start seeing 2,000 different variations of credit reports and how those work in the AUS systems and how those work with rates, it's a bigger knowledge that these people are able to learn. And that's part of my training.
Yeah.
Is you're going to get to see more. So therefore you're going to experience more. Therefore you're going to have to know more. Yeah. The issue is you're going to have to know more quicker.
Exactly.
Where, a lot of times in the industry, you can make a mistake and have a little bit. Well, when you're doing high volume and high calls and you don't have time to make mistakes. And so that's where I've set up my success is my loan officers, they close loans, but they also have time to answer the phone. They also have time to return calls. Pre-quals we generally just say worthless, right?
Exactly.
Because you have so many different levels of pre-qual in reality. So a pre-qual simply means that you gave someone your information, they reviewed it, and they thought it would qualify. Our pre-quals, of course, everyone's going to pull credit, but we go a little deeper on our questions, like asking about income, asking about assets, which is stuff people are supposed to do. But when they go online and they do it just automated, if you say you make $5,000 a month and last month you made it, that's great. But the month before you made $4,400 and the computer system didn't ask you that because it's automated. It doesn't know. That's the difference of a true loan officer pre-qual and a not loan officer pre-qual. Now, everyone's going to go through, they're going to fill out the form, they're going to do all that stuff, and then hopefully they're going to get a call from a loan officer to go over the information they put in. Now, I can't control what loan officer calls them from any other company and what information they have. I can only control what my loan officers ask. So, I know I have if my loan officers 1 through 6 are all going to ask the same questions. They're all going to be, because of being trained by me, being trained by Betsy, they know, because of seeing so many files, they know the what ifs. And so they know to ask that question. Okay, you make $5,000 a month. How much you make an hour? $15 an hour. Well, do you have overtime and bonus? Because those don't add up to each other.
Yeah.
And then go, right? Oh, you just started this job. Okay, well, that's a problem. Now we can only use your base. So it's just a matter of knowing all your guidelines off the top of your head and kind of structuring it there. So pre-quals are just as good as the information you give us. When you give us a pre-qual, we look at it, we ask you all these questions, and then we go from there. And then that's when we start like document requesting. Hey, where's your pay stubs? Where's your W-2s? Where's your tax returns? Where's your bank statements? Those are the information that we need to verify. It's trust, but then it's verified. Yeah. And then that's when usually you go in and you start ripping the file apart because you're trying to find all those variances that an underwriter is going to find. Yep. You're trying to go ahead and beat all the guidelines or meet them because you know what they are. You're not waiting until after the fact. So
I hear that so often from lenders that don't have Ricky's team's proficiency when it comes to underwriting guidelines, and it's really frustrating because it not only wastes my clients' time, their money on inspections, money potentially on appraisals to then get middle way through a deal, and you're like, oh, by the way, this doesn't work. I didn't know about X, Y, and Z. They're trying to head that stuff off.
Yeah, we definitely are trying to head that stuff off, and that comes from the new construction background. When you're dealing with builders' money and you have, $25, $30, $40 million of their money tied up, they want to make sure you're pretty accurate. So like on our builder pre-quals from start to finish in the last 15 years, we're averaging like 92, 93% from pre-qual to close. And so that 7% is that fallout of didn't have the right job, didn't have this. So those are good statistics. Those are what builders like. So if you can do builder loans, you can do regular real estate anywhere.
That's awesome.
That's easy. Those are easy loans.
I never really thought about that being the real differentiator for my experience where it's working with you versus other companies. And it makes a whole lot of freaking sense because you do so much volume compared to other lenders.
I do the builder volume.
The builder volume, right?
Yeah, and that's what I stick to is because that's
Hey, you got the relationships.
I do. You got the relationships. You have the people that come into the builders, and then if they don't buy with a builder, they buy somewhere else, and we still get that deal.
Exactly. So it's a great way to originate relationships.
My marketing's really cheap.
Yeah. Yeah, it is. It's okay.
It's really cheap because everyone else is sending me their deals, but all that's done on a handshake.
Yep. 100%, man.
So, and all that came from, what's crazy is it all goes back to when I had bankruptcy and I had crappy credit, and I had to build my credit. And then I had to teach all my builders that I could build their clients' credits too. And then all of a sudden, that's how I got all my builder contracts.
That's amazing.
13, 14 years ago was
just that sweat equity you put into those
I
relationships.
screwed myself up so I could help everybody else.
That's awesome.
Yeah, but it worked out. I mean, and like I said, I love it. I like grabbing a client and figuring out if a client truly wants to go from A to B, how do you get them to B? It may be 1 month, it may be 6 years. It's a future client. And if you're a businessman, you're not always thinking about today or tomorrow. You may be thinking about the person you help. They may not buy for 5 years, but you know what? They have friends and they're going to tell you, hey, look, I didn't buy from him, but he was super nice. And he didn't just hang up on me and he didn't tell me to go to hell.
That's right.
He said, hey, you're not ready. Do this, this, and this. Check in with me. And that's sometimes people don't know what they don't know. And I said this to you earlier. You don't know what you don't know.
Right.
Until you know.
And then you got
And usually you're behind the 8 ball.
Exactly. Then. That's why it's so important to work with somebody that knows what you don't know. Don't just go and get some bimbo on the internet to give you a pre-qual. If you can find a good realtor, and if you can get good recommendations from who they have used, or people in your circle that have had great experience with that lender, and then go in and ask the same questions he said. Are you just some part-time loan officer, or do you actually do this full-time? How many loans have you had experience with? How long have you been doing this? What loans do you like? Because I've learned, too, that not all loan officers or companies work best with all types of loans.
100%.
And it really, like, for example, like we do a lot of investing. And you don't want to just go necessarily, like Ricky does great on the investment side of stuff because he combs over my stuff. But like we've had a couple deals, he's had to send me to another bank because he's like, their products are better for what you need. And he's always going to be straight with me about that. You have to know, what kind of loan product do you need, and what lender is going to specialize in that and give you the best service possible around that loan. So ask a lot of good questions. Be, proactive in this. If you think you might want to buy a house in like the next year, go ahead and start doing the mortgage process now, because you think everything's good and you think you know what you qualify for, but until you have a professional run your application and really work through the nuts and bolts, you don't know.
Right. And especially if you start 9 to 12 months ahead of time, it really gives you to where you could work with a client and get them where they wanted to go, whether it be in saving money, working on credit, working on debt pay down, working on anything. Because a lot of people just think, sadly, I go buy a car now, I snap my fingers, and about 2 hours after snapping my fingers, I go in and sign, and then I leave with a $50,000, $60,000 car. And they play this game where they get to say, do you want your payment at $700, $800, $900, $1,000 by moving the term?
Yes.
And people, a lot of think car, like buying a house is like that. No. I've had people tell me like, I want my payment at this. And you're just like, were you putting $200,000 down? Because they don't have that real world experience of what a mortgage is. So if they were there ahead of 9 months or a year, and to actually ask these questions and get the answers, they would have time to prepare, because 9 months a year is not that far. And hopefully the thing would be to speed up that process. But the thing is, people never get started, so therefore they never get started. They're always a day away, but they never get the day started.
I always have two kinds of people when it comes to buying a house, where it ends up we're not ready. Either they knew their credit was crap, or they thought they were broke as a joke. They run their application, and then it's like, oh man, I can actually afford a house. It might not be anything crazy, but they actually can afford a house. A lot of people don't even realize they're going out there paying $2,000 a month in rent, and they have a full-time job. But they have this mindset they can't buy because they don't make $100,000 a year. And then they'll get their thing. They're like, oh, actually, you do qualify for a house. And then I'll have the inverse of that. Somebody who makes $100,000 a year who thinks, oh, it should be just so freaking easy to go get a mortgage. And then they realize, oh, by the way, I've never bought a house and it should be easy because I make 100 G's a year. But you have, $130,000 student loan payment that you're making every month, and that's 1%. If it's in deferment and you're not paying, it's 1%. Getting approved ahead of time will save you money and headache after the fact, because you don't want to wait till your lease is about to expire to start looking for a house and thinking you're good to go, because then that's not fun.
Yeah, and there's mortgages is not a straightforward calculation.
Right.
Right. So you said earlier 1%, and it just depends on what loan program you're on.
Okay, that's true.
Some can be a half, right? Some can be everything divided by 12, depends on the VA loan. Some can be omitted. So it depends on what loan program you're going.
Interesting. I didn't realize that.
Yeah, I mean,
That's why I call Ricky.
You got
I
so
don't know
many
anything. I always think I know things, and I realize.
Well, you went earlier to where do people do different types of loans? Yes. So you have people that we specialize, and I always say the big four, right? FHA, VA, USDA, and conventional. Mm-hmm. And then it seems like that's boring because they're only 4 loan products. And then you can expand off those loan products or down payment assistance off those 4, right? Yeah. 100% financing on FHA off those 4, construction to perm off those 4. And then all of a sudden down to 500 credit scores, FHA, then all of a sudden it's like, oh, well, these do expand.
So many people you can serve.
And then you get into the non-conforming or the non-QM loans, which are bank statement loans, DSCRs. There's a whole different area of what you're trying to do. So it does matter what area you're trying to go in.
But if you work with somebody good and local, like Ricky, they're going to tell you, hey, I can't do this, but so-and-so can. So they'll give you good direction typically if they're worth anything at all.
And I can say this from any lender that or loan officer or mortgage broker or whatever the case may be. I can tell you for anyone that I know and I would recommend, whether it be work for me or not, every one of those guys have a backup plan. And what I mean by that is if they can't do your loan, they have someone they can refer to.
Right.
Which is what you recommended. Like you said to me earlier, I had someone to refer your loan to, right?
Until he tried all other options. He's like, I can't do it, but so-and-so can. And they're going to close it.
Right. A good loan officer or a good lender is always going to be complete the goal.
Yeah.
If the goal is you to buy something, it never says somewhere in that goal for me to make money.
Right.
But if I can help you complete your goal, right, you're always going to turn around and say, I use this bank, but Ricky referred me and he helped me. Your friends are never going to hear they're going to hear that bank did it, but then
they're going to hear Ricky helped me.
And they're going to hear your friend referred you. And they're going to say, wait, a competitor referred you to a competitor? Yeah, because one of the good things is the reason I think I'm decent in this industry is I know other people's guidelines.
Yeah.
I know what programs they offer. I know what loans they offer. I know what they like and don't like, right?
Yeah.
I can't do every file. I know that. I mean, as much as I'd love to, but when you have that, maybe someone else is better in that area. The goal is to get the client completed, not just
make the money. Or say, deny, sorry.
Yeah.
And it's the same for real estate agents. Mm-hmm. Like, I'm not an expert in every single aspect of real estate. I do have things I specialize in. And if I know I'm not the agent to help you, I'm going to send you to the person who can help you.
Correct.
And I don't service every market. So if I can't do the job efficiently, I'm gonna refer it out. So that is definitely a sign of good service and good business, a good business person. So one of the things I want to get out of today's episode is I just want your explanation on interest rates, what they are, and how are they decided.
I think the easiest thing to do is give you what a real world interest rate is. Yeah. Right. So what does an interest rate mean? Let's just get down to basics.
It's the percentage of the money you're making on the debt.
That's what people think it is, right? So I'll just tell you my definition of an interest rate.
Okay.
It's how much money can I loan you safely and get my money back? That's all an interest rate is, right? So if you start thinking about it, you have, let's just say everybody went to school, right? You went to school, you're in lunch money, someone wanted to borrow money, you had no problem handing them $5 because guess what? The next day they were going to hand you your $5 back.
Right.
Then you met people who you would not loan lunch money to because no matter how many times they say you're going to get paid back, you're never getting paid back, right?
Right.
Okay. Well, those people also have socials and credit scores.
Yep.
And they're buying houses.
Yep.
So, or cars or anything else. So it kind of goes behind, you have several things that make up interest rates. You have credit scores, loan programs, and then you have loan to values. So that's just one of them. So it's all about risk.
Right.
When you hear about the government, where, I always hear about
where
did the government come, right? They always talk about prime. Well, that's really an interest rate that banks borrow from each other.
Okay.
It's not the mortgage rate.
Got it.
Mortgage rates are based on the 10-year bond or 10-year note, TNX, and then your MBS bonds. So your MBS and your TNX. Those are really what they're based on. MBS is a bond that's sold, right? The TNX is a 10-year note that is sold. And so people buy them and sell them.
On the market.
On the market, right?
Yeah.
Because they secure their money for 10 years. Yeah. So when you asked about, I know you're referring to when rates went super low in 21.
Yeah.
The government stepped in and provided a ton of liquidity. And when you provide liquidity, you're buying these bonds, right? And you're buying these notes. And when you do that, when you have plenty of money in the mortgage side, the rates are going to be super low.
Right.
Right.
Because they have a lot more to lend. So it's
Correct.
like supply and demand,
Correct.
right? So the supply of money was high. And so it was able to bring that rate down.
Right. Do you know why the government was in there? Because no one else was buying. So if they didn't do that, it crashed.
Do you think that was because back in 2008, everybody lost their butt? They lost trust in the stock market?
No.
The mortgage market?
08 and today are two different animals.
Right. That's true.
A lot of people, 08, 07, when you had the real crash, we had what was called the mirror test. If someone would breathe and they showed on the mirror that they were alive, they could get a loan. And since then, you have so much more data tracking. People talk about artificial intelligence. We've been using this in mortgages for a while now, 5-6 years. Okay. And they also use it for statistical data. We track everything. When an appraisal goes in, it's tracked. The comps on it are tracked. Everything. So that's how it does a comparative data. If this one
that's
sells,
how they know. Yeah.
Yes. Everything that goes when you're running a file goes into a black box and it calculates algorithms because this is how the world works. Certain credit scores may get a loan approval based on prior data that's in it. It's the black box. So if you have a bunch of 500 credit scores that are defaulting, guess what's going to happen in the next scenario? They're not going to get loans. Yeah. So it's all into black box, all into around
They're
how
using
that
those
works,
giant averages.
Correct.
And statistics to decide how the underwriting process
and
lets
then when
people through those.
And when you're talking about money, right? Money it either goes into the stock market or goes into the MBS bond. So that's kind of where the money goes back and forth. When you start seeing the stock market do really well, you're going to see mortgages do worse because people are going to pull their money out and put it in the stock market where they can make more 3, 4, 5%. They're going to try to make more money over there. So it's usually a very, very inverse. And you have to, in order for the mortgage market to work correctly, you have to have liquidity. You have to have investors who are willing to put money in. So it's kind of weird. So we have these spurts where rates get bad for a little bit. 2 days they get bad. And then the next couple of days they get better. And it's because people are waiting and then they're going in and buying their bonds and then they're waiting for the next go round. You have hedge funds. You have a bunch of people who play in this field. It's not just, the government does not control interest rates. It's free market.
That's amazing.
And then the next part of the interest rate that's controlled is, so you do have some government part of it, the 10-year, the bonds, all that's sold. But then you have how much does a lender want to make off the loan?
Right.
That controls the rates.
Right.
So if you have a lender who wants to make more,
they're going to mark the rate up a little bit. Yeah.
So there's so much that go into just what is an interest rate.
Right. What created this scenario where we did the whole 2021 rates were really low and now they're really high?
Yeah.
What created that scenario?
Well, the 2021 was definitely the government stepping in and providing liquidity.
All that liquidity, like
Correct.
we said before.
Yeah. The 2022, that's easy. The Fed stepped in. And so part of the thing you have to understand is inflation.
Right.
When you have prices of homes going up, the only way to do that is to kill interest rates.
Right.
Because then no one really wants to buy. And then they start getting hopefully a little level, maybe come down a little bit. So you're in this catch-22 because they originally said the first part of 24, they're going to start working on interest rates and reducing it. And then now quarter one's over.
And none of that
Nothing happened. Quarter two, we've had rates actually jump up a little bit because of inflation. If the Fed's going there and drop rates too fast, your house is going to appreciate. You're going to go right back into the same scenario. So it's a fine line of what they have to do. This all started in 22.
Yeah.
If you start looking at the Fed prime chart, it went up. It was like three quarters of a jump. And then the next quarter. So that is the only thing they can control is the Fed prime. So when they're controlling the prime, right, they're controlling what banks borrow at, it makes the rest of everything go up.
They basically set the prime, which is what the rate banks can borrow liquidity against to write new debt.
Correct.
So that's how it trickles back down to
that's why
affecting your interest rate.
Correct. That's why you've seen, so sense. Like a lot of things are based on prime. You have HELOCs, right? Most HELOCs are not fixed. They're lines of credit.
And they're very
credit cards. So a lot of those things are based on that.
That's
commercial, arms.
Wow. So what do you think is going to happen with all the interest rates and what the government's going to do? Do you actually see interest rates coming down? Because I'm not living in that world where I foresee rates going down. I'm living in a space where they could potentially be as they are or even a little higher. I'm preparing people for that reality. If they come down, great, be prepared to be competitive if it does. But what are you telling, or what do you think?
I always get asked this question.
I know you do. Everybody asks.
What are rates going to do?
Yeah.
And if I could answer this question, I would be on my $1 billion yacht, because there really is no answer.
I mean,
you're going to flip a coin and you're going to get heads or tails, right?
Right.
Someone's going to be right. Someone's going to be wrong. Rates are either going to go up or go down.
Right. It just depends on what.
So you have so many different forecasts. So when we looked at the end of 23, you had like even Fannie was like, hey, we're going to get rates under 6%. And then now they're like,
I want to do that.
A bunch of the forecasters are backing off that. Yeah. I do not see, honestly, rates getting better until the election.
After
election.
Yeah, that's my thoughts too. And
you have if rates start going down now, right, you're going to have an influx of just property values going up. You're going to create that urge to buy again. And I think now if people were really smart, they would go out and look and decide today's rates aren't bad. Even
I'm buying 2 houses.
Even between 6.5% to 7.5%, that's cheap money. Super cheap money. And if you can get people to understand that, right, maybe it only lasts a year. Maybe it lasts a year and a half. But the minute the rates go down, the value is going to go up. And then that's
you're going to have to come out of pocket.
Right. But you're going to have equity.
Yeah. Well, if you buy now with 7.5% interest rate, you can benefit from the fact that you didn't have to pay as much. And then if you wanted to refinance later, you can. And that's kind of the same advice I've been giving people. Go ahead. If you need to move, make a plan and let's get you moved. Mm-hmm. Find a house you love, because there's not as much competition right now. And there's a decent amount of supply. People are a lot more comfortable than they were in the fall. I see a lot more inventory coming up all the time. But it's not like this manic buying craze like it was a couple years ago when rates were really low. And you can have an inspection. You can actually, have a 45-day close if you need it.
Normal real estate?
Yeah, normal real estate's happening. Mm-hmm. But when moment rates, like you said, go back down, that will go away for however long. And even if rates stay between like 5.5% and 6.5%, which I foresee being the case, I don't think we'll ever see 2% interest rate. I think that was ridiculously cheap money and it wasn't sustainable for our market. But when that dip happens, you'll see a lot of people. So I'm just trying to buy up as much stuff as I can right now so I can refinance it later. And if I can't, then I still got a good deal because I bought it. Buying now is always better than buying 2 to 3 years from now, because the properties just still appreciate, especially in Florida where we are. Everybody's trying to move.
But it was bought on a game plan.
Yeah, exactly.
I think that's the thing, is no one buys on a game plan. It's just like explaining to them like what's going to go on in their transaction. Just future costs, like, taxes and insurance may change.
Oh, that's so true.
So it's just simply walking them through it to where they have a game plan. So that's the thing, is could you imagine, like, you're telling somebody, if I told you today, hey, you're closing, but your tax and insurance may go up next year, you wouldn't be as surprised next year if your tax and insurance went up, right?
No, I wouldn't, because I would have had a heads up.
Yeah, but imagine now you're getting your bill and your payment goes up, right? Who lied to you? The lender lied to you, right? Yeah. Because your payment will never change, right? Well, P&I will never change, but taxes and insurance will. So
every homeowner in Florida is complaining right now about insurance going up.
Well, my flood insurance just went from $2,800 to $7,000.
Yeah, that's nuts. With interest rates, we understand that the urgency will be there if interest rates go back down.
Correct.
Buy when you can afford to. But if you're a buyer in this market and you're thinking maybe the next a couple months, I'm going to be looking to get a house. What would be your best advice for that couple? Say this they're buying their first house. What advice would you give them?
I think it'd be to sit down and have a real hard budget talk. A lot of people don't understand. They start with how much house they want to buy versus how much they want to pay per month. We get that up quite often. The sticker shock.
Yeah.
So I think it'd be coming up with a game plan first, and part of that game plan is budget, right?
Right.
And what you're willing to spend. So if you're only paying $1,500 a month in rent now, and your payment's going to go to $2,500, the $1,000 has to come from somewhere.
Right.
And so you have to be mentally prepared for that instead of us as the lender shocking you, letting you know. And I think that's where a lot of people get the cold feet. I've seen people talk to them on Thursday, and they mention nothing about buying a house, and the next day they're buying a house, and they're all up in arms and they're flailing, and you're like, whoa,
what's going on, dude?
I gotta go. It's like, calm down. Like,
yeah.
This is a lot. This is a 30-year decision. Just relax, take a breath.
If you're working with me, that typically doesn't happen because we have that conversation. But what can happen is I have a client who will bring me a house. Like maybe they weren't in the market to buy a house, but then this amazing property hits the market, right? And they're like, oh my God, I want to get this. Or they want to go ahead and start shopping without a pre-qualification. And there's a couple of instances where when I'm trying to build a relationship, I might show somebody one or two houses, but after that point, we're going to get pre-qualified, right? So they're going to run their credit, and then they're like, oh, a $400,000 house is going to be like, what, $3,000?
$2,500, $3,000.
Yeah, a month. I mean, and people it blows their minds. So understanding what the money costs, what you should actually theoretically expect in the hypothetical scenario you're wanting to walk into is a really important conversation to have with the lender who really knows what the heck they're talking about.
But you're going back to that. When I go back to the budget, we hear this all the time. People are like, I'm going to spend $2,000 a month, right? And then all of a sudden the house payment comes at, let's say $2,100, $100 off. Yeah. They will come up with every excuse in the world not to buy this house.
Wow.
And then we'll tear through their bank statements and we'll see, 20 trips at Starbucks at $9.80 a piece. And you're like,
excuse me.
Yeah, like you're blowing money that you could afford this $100 a month. So it's just about priorities. But that's what I think. It's just the shock. I mean, okay, I'm not gonna lie. If I was not ready to buy a house right now, I wouldn't be living like I'm ready to buy a house, right? Maybe I'm having a little bit more fun, going to the movies more often or going out to eat or whatever the case may be. Maybe I'm in a little apartment with my honey.
Yeah,
and I don't want to be there.
Yeah.
So it's just a matter of having that conversation and say, hey, look, things are going to change. And this is why they're changing. Well, we're going to buy a house now and we're going to have this, and this. So just the mindset.
No, I
think we'd get more people to convert if we could flip their mindset first.
100%. There'd be more homeowners.
Correct.
In this less renters if people would switch their mindset. I personally can say, I've been in real estate for 10 years selling houses. And for the first 5 years, I didn't actually own my own home. And Ricky was on my ass. He was on my ass because I was a single mom and I was making really good money. And I had, like he said, you have the money to do this. But I was younger and I was nervous. I was scared. Okay, I don't know if I want to take on all that. What if the air conditioner breaks or, whatever, just all the variables. But I kick myself in the butt because if I had started back when Ricky started pushing me to say, hey, you need to do this. You need to get your crap together and you need to really make this part. Let's sit down and create a game plan. I can't tell you how many times he's like, let's sit down and get a game plan together. And I didn't do it, but I finally, 5 years ago, he helped me get into my first loan. I'd already sold probably over 300 houses by that point for other people, and I didn't own a house. Now I own almost, after this week, will be 4. Mm-hmm. So that's pretty cool. And I've done that just in a short period of time. And I wished I had started way sooner, but it was a mindset shift I had to make. And now it's I just want to keep replicating this because I'm like everybody. We all want to have passive income. We all want to build wealth. Well, most of us, and not have to, work till we're dead, and so building that game plan to have a retirement plan, to have a strategy to actually being a homeowner gives you a lot of control over your finances because you're not, mortgage, not mortgage, your insurance may go up, your taxes may go up, but you're going to have a lot more control over your costs you know, of your housing versus being in a renter situation where you're just I can't tell you how many clients have come to me who said, I have to buy a house because their landlord decided to sell their home or their rent just went up $500 and they're sick of it, you know. So it's just all about, you know, some people it just takes them getting pushed to that. But yeah, if you want to get into something eventually in your life, have a conversation with a good loan officer. It'll make a huge difference.
Yeah, and I think the difference with you is just getting out of that comfort level.
It wasn't that I didn't have the capacity. I was just nervous.
Everybody's nervous until they do something.
Exactly.
And that's the biggest thing is it's funny, once you get past doing a couple, it seems like you look back and you're like, why was I scared?
So scared?
Yeah, why was I scared about?
Yeah, it's just, a lot of clients won't go to a loan officer and do a loan application. They want me to show them 10 houses because of that, because they're scared of what they're going to find. They're scared of what they're going to be told. And 9 times out of 10, either it's better than you thought, or they're going to have a plan to help you get you where you want to go.
I see a lot of people who maybe their first house isn't their house of their dreams, you know, in their mind. Right.
That's a big deal.
But if they have a game plan and they realize, okay, maybe I'm only going to stay here for 12 months, 18 months, right?
Yeah.
They now have an asset that maybe next time it's better.
I can't say that hard. I can't, because I had that same problem when I bought my first house with you. And I thought I needed this super nice, super finished place. And I thought, I can't afford what I want right now, so I'm just going to wait. But what's like, Ricky's like, well, what can you afford? And I got approved for because I'm self-employed, because I, you know, of all these other things, if you're self-employed, you understand. I didn't qualify for as much as I thought. So what I did was I bought a house that I could afford based on my taxes would allow me to borrow. And I put a ton of money into it. Now it's worth way over $400,000. And I paid like $250 for it. And now I have an asset. Now I have something that's worth something. And I put like 40 grand into it, made it really nice. It's beautiful. But if I had just waited till I could afford the $400,000 house, I may have not bought anything, and I would have set me way back. And I'm so thankful because now I have this asset that's just given me the courage to go and take more steps and take more action. So it's been a huge blessing. When it comes to mortgages, people just need to get out of their comfort zone. If they're scared of it, just ask the questions.
Write down how much you make without taxes, like pre-tax, right?
Mm-hmm.
That's the first thing you need to do, right? Get a Credit Karma, something to monitor your credit. I don't care what it is. Like I use Capital One credit-wise because it just tells me.
Right, it's easy.
But just little things like that, you know, starting to become smarter with your. You know, credit helps not only buying a house, but buying a car insurance, house insurance, renter's insurance. So you can start monitoring that stuff. And this is stuff you don't need a professional to do.
Right.
You just monitor your credit. If you try to keep collections from hitting, try to keep medical from hitting, try to, work all those, pay your bills on time. If you budget.
Yeah.
People don't budget.
Live
they like to
in
spend
your
first.
means.
They like to
don't
spend
have
first.
$50,000 worth of credit card debt. And that's a big thing I see. Student loans keep people from buying houses, and credit card debt, consumer debt that's unnecessary. And before I bought a house, confession, my girlfriend was on me really hard because I at the time had like $40,000 in credit card debt that I'd use it in college. It was an old credit card too. It was like I had used it back in college, and I'd put a bunch of stuff on there. And I was just like making the payments, but I wasn't making a dent in it. And she chewed my butt. She's like, how can you even have this? This is wrecking you. Go pay that shit off. I paid off $65,000, not just that credit card, but other debt. I paid $65,000 worth of debt off in a year. And it was the following year Ricky was able to get me a home loan. And that was hard as hell. I didn't go out to eat. I saved my money. I worked harder. I made more money that year.
Because you're focused.
Because I had a goal. It was more money than I'd made the past 2 years combined. I made that year, and that was because I had a very targeted goal. I had very targeted things I wanted to accomplish. And I was woke to say, hey, I have to get this crap under. A lot of people just want to put their head in the sand when it comes to their finances and just say, oh, one day I'll take care of it.
It'll be better tomorrow.
It'll be like, it's just going to freaking go away. Like, yeah. So, but yeah, it was a huge thing for me. It literally changed my life, paying off my debt. And I have no no consumer debt whatsoever. I don't need to, thank God. I just pay I do leverage point credit cards all the time, but I pay that off.
Credit card points.
That's the best. If you don't know about that, we should have a whole episode on
credit card
on credit card points.
On my 2% cash back.
Yeah, it's so nice. So I want to wrap this up with, what are some of the things that you wish people that they do that you really wish people would not do when it comes to buying a house?
Oh my goodness. This is a fun one. Somebody wrote me a note over there.
Oh, did they?
And it was on that question.
That's funny.
And the note said, tell people to quit going to Google, reading one article, and letting them be an expert. I think the problem is they're not letting people be an expert.
Yeah.
I know one of the things we face is, because we see so many files, we're able to give a quick expert answer, and a lot of people don't like that. Yeah. They want you to wait 2, 3, 4 days and then tell them you banged your head against the wall, then come back and answer them. And it makes them feel so much better than when you're like, I've seen this 200 times. It doesn't work. No. So I'd say trust but verify. That's the number one thing you need to do. If your loan officer is telling you something, try not to run it by 8 other people on the internet, because no one knows your exact situation.
Right.
And this goes even when realtors send us, if you send me a client, right? As much as I'd like to tell you what everything is going on behind the scenes, I have privacy laws. So there's only so much I can limit.
Yeah.
Right. So
but I know if he said it, it's because he knew it was.
There's only so much I can limit and tell you. Legally, I tell the client all day long, but if I can't tell you something that behind the scenes, it's NPI. So you're gonna look at me and what's wrong? And I'm like, it doesn't work.
Yeah.
So I would go back to set a budget. Step 1. Step 2, start looking at your credit. Right. Step 3 is when you go into start doing some research for local people around you and just ask them a question. One thing we do for our company is a lot of people don't like hard inquiries on their credit. Because we're dealing with builders, maybe you're not building with my builder. Right. Maybe you're going to go to another builder, or maybe.
Exactly.
So we do soft pulls.
Okay.
So that's one of the things we don't like to hit people with credit inquiries to start with, because maybe they don't finish with us.
Right.
A normal client who would call us would have no clue of that.
For sure.
Right.
They don't know the difference. They don't even know what they don't know. They don't know the question to ask. That really leads me into another thing I wanted to get your opinion on, because a lot of people are like, should I shop my rate or should I not shop my rate when it comes to buying a home? So if they're going to go look at purchasing a new home, should they go to 2 or 3 local lenders and get 3 different loan estimates and just compare them? Was that something you would recommend people do?
I would always compare, right? Recommend to compare, and then actually ask them. So a lot of times, you can give me, it goes back to going online and pre-qualing with the big box people. So when I do your loan estimate, it's based on everything you have, right?
Yeah, all the stuff.
Maybe their rate is lower than mine, but it may not be it may
not be a real rate. They may not actually.
It may not even be a viable scenario.
Right. They may not have enough info to even tell you what their rate is based on the little algorithm you put in the computer.
Correct. But I think most everybody is going to be generally, and that's the thing, is people think you're way off. If I'm an 1/8 off from my competitor, or my competitor's an 1/8 off from me, is it money? Yes. But is it a lot of money a month? $20, $25. People think it's hundreds.
Right.
And so they look at rate first, but they never look at rate and cost.
That's what I was going to point out, because that's one thing we noticed when my girlfriend and I were buying a house, shopping rate. She was shopping rates, and I was just like, she's done this a couple times. You know what lenders I like. She knows who she can call, and she had shopped it out with a couple different people. And comparing all those, the rates were very similar, but it was when you got down to what's their loan origination fee, what other junk fees did they put in there, what are the hidden costs in that, and look at your cash to close and what your mortgage payment's going to be.
Right.
What would that be? What you would recommend people to do?
Correct. And then the original one you started with, have them review it and ask and answer questions.
Yeah.
Because you trusted them enough to do the application, so that's one of those things.
Yeah.
I believe it or not, so. I'm not one to push everybody to use me. You'll never hear me I've never been one, I'll ask for a deal, but I don't stick my face in.
Well, you're at the point now with your business, you don't have to.
Yeah, but I've never been like that. It's not like you'd be talking to a client and all of a sudden be like, I need your loan. Like,
don't forget to call me.
Yeah,
I'm not like that either.
I've never been like that. So my sister right now is doing a mortgage, right?
Yeah.
And so she calls me last week. And so we're licensed in Georgia, Florida, South Carolina, and Alabama. Mm-hmm. And she said to me, they are offering me this rate. I said, who is they? I didn't know.
Yeah.
I didn't even know what the hell she was talking about. But she was talking about a refinance. So, of course, she got one of those flyers in the mail to refinance. And me being me, I'm also the baby brother. So one of those things you have to deal with is like, Marlena, you trust me. But it seems like when you have friends and family, you don't trust them immediately, right?
No, it's like you're my little brother who may not know everything.
Yeah, so I can make a client a friend easier than I can make a friend a client.
I got you.
So I just told my sister, I said, listen, sis, you go get the best deal they have from them and just send it to me.
Yeah, let me look at it and I'll tell you if it's a good deal or not.
And their deal came back. It was 6.49 at 2.75% origination on a $512,000 loan. So
then
set me up really easy. I saved her some money and like 5/8 of a point.
That's awesome.
On a refinance. So that was her lender, right?
Yeah.
I couldn't until I had someone who gave her that information.
Yeah, you needed the loan estimate.
Right. I didn't need her loan estimate.
Oh, you didn't?
Not to beat them, no. Our system's already set up for that. I don't have to play games.
That's cool.
It was just a matter of she wouldn't have respected it.
Right.
Until she got another professional's answer.
Well, that's what I was thinking too. It's like, I think,
because she knows me.
Yeah. So even if you have a lender you like, sometimes it's great. And I've learned this as being experienced now as an agent. You know, a lot of people trust my opinion, and I give Ricky's contact info out, but I also give a couple other local people. And I say, this is who I use, but these are also good. These are also people my clients have had success with, because I want them, when they pick their loan officer or the mortgage company that they go with, they've hopefully shopped at least one other person, whether it's one I picked or no one I picked, they've shopped it out with at least more than one person. So, but what does that do to somebody's credit? You know, at what point, does it impact you?
Generally, you have about 45 days to repull your credit under the same inquiry.
So like a mortgage application. Correct. So you could do a couple, like two or three, and it would be counting as one against
one inquiry,
you.
Yeah. Okay. The biggest thing is people don't understand is credit scores can change daily. Yeah. Because, for example, you could have 2 credit cards, 3 credit cards. One could reported yesterday, one reported today, and one reports tomorrow. Depending on what day I pull is what information it shows.
Oh, wow.
Credit bureaus are live. So when I pull it, it's the information I'm getting at that time.
In real time.
Correct. And mortgages are different than cars. Mortgages are different than credit cards. We have different factors that create different credit scores.
Yeah. And they don't go off your highest score when you're getting a mortgage.
The lowest middle, sorry.
Yeah. And everybody's like, I have an 800 credit score. I'm like, no, you don't.
Yeah.
You might, but not by what the mortgage lender is going to go on.
So, and that's, I didn't come up with that system. 800, 700, 600, your credit score is 700 with us.
It's crazy.
But I love it.
Yeah.
I get to see a lot. I mean, I really do.
Yeah.
I get to help a lot of people. I've helped a lot of people make a lot of money.
Yeah. And I would say that the lenders, like having Ricky to help me with clients, is probably, I can only do so much when it comes to getting somebody through a deal. Like I do half of the work really when it comes to making sure the contracts are good. You have the right inspections. You even if you have a lender you've picked, I help manage that person. But when you have somebody like Ricky, when it's on the buy side, any good lender makes a world of difference when it comes to my client's success. So my career's been built through relationships that I have with people like Ricky, because it makes me look really good when I have really good people to help me do a deal. And somehow or another, when my clients' lenders, they pick them and they screw up and they suck and it makes the deal a nightmare, it's still my fault.
It's always the lender's fault. Don't ever get past that. It's always the lender's fault.
No. Well, sometimes
it can be my fault and I'm not in the transaction.
Yeah, I got you.
I laugh at some of the stuff that's the lender's fault.
Well, and then title, they just get the worst of it. We'll have title on one day. And have them explain their life to us.
Title gets the brunt of it because title's like, today's Thursday and they're like, someone's promising them they're closing tomorrow at 10 o'clock and title's over there going, we have no clue of what's going on.
Yeah.
I don't have a package. Why are people calling me for figures?
It's like that it reminds me of that meme where it's like the guy's like, you're making 500,000, And she's like, what? I'm only getting 25,000. And he's like, y'all are getting paid for this? That's title.
Yeah.
That's so title. Title is the last guy, and they get the shit into the stick every time. So I love my title people, and I'm thankful that they do what they do, and for my lenders too, because I really couldn't do what I do because
it takes a team.
It does. It takes a team. We've got a good one. I remember when I first met Ricky, I was so impressed by him, and I genuinely feel like you're a little bit older than me, but you're genuinely like one of the only people I know that are super self-made. You've only told me your story like once or twice maybe, but I tell it to other people, and I'm just like, dude, this guy is impressive. So I want you to go back a little bit to when you first got started in mortgages. What got you into this business, and how did you get here with Home Solution Lenders?
Cool. That's a fun story. So it actually all goes back to 2004. So that's when I first entered the industry. I was at University of Florida. I was up there doing my degree in marketing, working on all that stuff, trying to learn, my way in life. And I actually got kicked out of University of Florida.
I'm not surprised.
So
actually,
I got kicked out with one class to go, and I came back and I ended up spending the summer with my dad. And so my dad's neighbor had just financed their house.
Okay.
And my dad's gruff. So he literally looks over the fence at Bruce and says, Bruce, what'd you make last year? And Bruce yelled out, about $250,000. And my dad turned to me and looked at me and said,
what are you doing?
You're smart. He's not. You're going into mortgages. So I kind of started in 2004. I went to work for Bruce's dad's company. So 2004, 2005, in that area, I worked up in Jacksonville. And then into 2005, I started my own mortgage company, which was Home Solution Mortgage. And then about the 2007 era, I wanted to become a lender. So we were Home Solution Mortgage, and then I wanted to become...
Explain the difference for everybody who doesn't understand what that means, because that's a big deal.
Right. In this industry, you have lenders, and then you have brokers. And what it is a mortgage broker is a person who brings a client to an investor for them to underwrite the loan. A mortgage brokerage is the actual company. The person who's underwriting, funding it, doing everything, that's the lender. So
right. They're the ones who actually have the money. The broker is kind of the middleman.
Correct.
They're helping originate the loan. They're finding the qualifying buyer to procure the debt, and then the lender's the one actually writing the check.
Correct. The lender's the one who's doing everything in house. And so in 2008, I wanted to become a lender.
So, but before you were just brokering loans.
I was just brokering. So in my
which is totally okay way to make money, and it's a lot of people have great businesses, but it's significantly different.
So I had the dream. I wanted to become a broker. So in 2008, my accountant said, hey, start a new company. It's cheaper to do that. So I started a new company, Home Solution Lenders. I was ready to come out of the gate, do all my loans, and then all of a sudden, FHA decided they're going to change the net worth requirement.
Right.
So between 2008 and 2013, the world was set on fire. I went bankrupt. I went foreclosed. I mean, they took my cars, my houses, they took everything. So, but I was at a good point in life where I had nothing. So I had this dream, like, if I have nothing, where do I go from there?
Right.
And then during that time, I met my wife, and I was ready to leave the industry.
And did she like work for you or something?
No, she did a loan for me.
Oh, she did. You did one of her mortgages.
I knew there was something. And I didn't make any money on her loan.
Oh, I bet.
But it kept the faith going. And then so in 2010, when me and her really got together, I decided I'm going to put all my effort into this business. And I sat down one afternoon and I wrote out what it would take to become an FHA lender. Now, at the time, they went from being $63,000 net worth to $1 million.
Which is a big difference.
A little different. Yeah.
That's like what, 10?
20, 12 times, 11.
Yeah, something crazy like that.
It's quite a bit. So
that's a lot of money to have in the bank.
So on the start of the business, I had to rebuild myself. So I worked 2010, 11, 12, 13, and 14. I paid myself about $12 an hour for 4 years straight. And I worked about 100 hours a week. And I saved every dollar I had to become a lender. And I had to become a VA lender first, because they had a lower net worth requirement. So VA and conventional were lower than USDA, which was lower than FHA. So I took all the lower ones I could, and I took that money that I was making being from a broker to now a lender, because I was underwriting them, and I took that money and I saved it. So between 14 and 15, I had enough money to become an FHA lender in 15. And then from then on, it's been just insane. Yeah. Getting to the minimum net worth was just the fun part, and then building the business from 16 on was a whole different.
I love Ricky's story because it just speaks to his dedication. And there's not many, lenders that actually and CEOs that work in your business as much as you do. And I know you've got a great team. Like you've really worked hard to build the team out. But this guy, like I can still call him up. He's the freaking owner of the company. He doesn't have to look at my files, but he does. And if my client, that's a relationship I value. Probably won't always be able to do that once you get to a certain point. But right now, I have the expert in my back pocket, and I just really appreciate that.
So I've hit my dreams. I've hit my goals. People always ask me where I'm going next. Like, where are you going next? And, when I started this company, it was 16 years ago. I never thought what was I going to do on year 10? What was I going to do on year 15? Like that never crossed my mind. And even though people are like, oh, you're a smart person, I didn't think that far ahead. And now I'm at year 16 and I'm like, 4 more years, I'm at year 20. Like, what do I do? But I mean, I have kids growing up. They've expressed interest in a business, whether it be the mortgage business, who knows? I'm at a point where I've grown to where I want to be. Now it's maintaining. So I've made it through the '08 crash. I've made it through the 2016 up and downs in rates. I've made it through the 2020-21 up and down. It's all cyclical. So now I can step back as a business owner with that experience and go, okay, that doesn't scare me. Like what we're going into now with rates, 2022 rates shot up, right? The government helped us. And then we were supposed to have some reprieve this year. We haven't had that yet.
Anything.
Right. If we can just stay focused on what we're trying to do. And my focus is, it's not in here, but if you read my mission statement, it's my heart. My mission statement is make sure I'm getting clients good loans, make sure I'm keeping my staff busy. I've never had to let anybody go because the market goes down. So I created a different culture here than most places. To answer your question, you'll always be able to call me, right? I don't want to be the company doing $5, $10, $20 billion a year in loans, right? I want to be the company that I get your loan done, I get you happy, I close 1,000, 2,000 loans a year, whatever it comes out to be. And then you walk down the street, you wave, I'm still the same person. Like that's what I want it to me. Me, when you're talking about being a CEO, is I truly care about the outcome. Yeah. So I always preach about there's people who are manipulators and there's people who are leaders, right? The only difference is a leader cares about the outcome for everyone. So if my team fails and we drop the ball, right, I screwed up, right? Yeah. I'm the owner, I screwed up, I dropped the ball. If my team wins, they did everything they could to get there, right? Yep. It's me coaching from the sideline, right? I didn't go out there and do the plays, but if we lose, I'll take the credit. If we win, I'll pass it on. And so that's what I kind of mentor to them is like, hey, look, there's a lot of people who are out there give you raw stuff in life, but do they back it up, right? Do they actually care where you're going? So I care where my employees are going. I care that they go out and see dance recitals for their kids, or if their kid's sick in the morning that they get a late drop off. Like, I want them, I kind of treat all my employees like I do my wife or my kids or my family and my sister and my brother. Like, I want them to have the same, do your job, come to your job and love it. But I also understand everyone here has your back. Yep. And so that's the different culture. So can we ever be a big company? No, you can't have 10,000 people with that leadership, right?
Well, yeah, you could try, but it doesn't, that's not important, right? But I want to thank you, Ricky, for being on. Thanks for helping me and all you've done to help me build my business and help my clients be successful, and just be real honest with all your answers, because that's what we want to give people, is like the real deal talk. And I'm sure we'll do some more of this. Maybe we can like niche in on like certain types of loans and like products, and who knows.
We can niche in all kinds of stuff.
Yeah. Well, thanks guys for watching. And I hope if you have any questions, you can reach out to us. We want to be a resource for you. So thanks for watching.
Thank you guys. Appreciate it.
Bye.